Good morning, folks, and welcome back to Almus Market Mornings. We start off the week by discussing a few important developments from last week. And when it comes to tariffs, there was an article in the Financial Times about Trump administration weighing the decision to roll back some steel and aluminum tariffs. Now, this may also be because the midterms are coming up, and the cost of living is something important that's looked at. Speaking of cost of living, US inflation was broadly lower, with the headline inflation coming in at 2.5% against the previous print of 2.7%. And today, this morning, growth figures from Japan were concerning as well and somewhat justifies the PM's stimulus plans. Good morning, JK. What are we looking at as we start off this week?
Good morning, Swaraj. First of all, it's going to be quite a dull Asian morning because a lot of markets are closed, including South Korea, Indonesia, and other markets, including China as well. US is also closed this week. So I think this today is going to be time to get back to your charts and other fundamental analysis to get ready for the trading ahead in the week. At the same time, we have had some important numbers. First of all, it was the inflation number from US on Friday. That was really something of a surprise on the downside, particularly year on year, coming at 2.4%. That is the lowest in 4 years. That's the headline number. And core number also came, though month on month remained at 0.3%. Core number came at 2.5%. That was also the lowest since March 2021. There is also a super core CPI, which services shelter. So if we, that is excluding the shelter prices, which is very volatile, that rose about 6.6% per month. That was also the lowest since September 2021. So all in all, comforting number, and there was a drop in the yields, which also helped somewhat stabilize the stock market. However, the rate cut expectations have not changed, and market is still expecting the first cut in June and two cuts for the year. That's the thing. And for Japan, yes, the GDP number was disappointing in the sense that the market was expecting 0.4% and the actual came at 0.1%. However, the number is better than last quarter. So that way, there is some growth. No doubt, the Kachi government is planning stimulus, and this calls for more stimulus will definitely intensify after these numbers. At the same time, how they are going to meet those fiscal requirements is what the market is looking at, whether there will be more borrowing or whether they will be finding some other way to get the money to spend is what the market is looking at. Hence, Japanese yen has not reacted much to these numbers as well. A couple of global updates. There is a statement from Iran minister who says that Iran is ready to consider a compromise to reach a nuclear deal with the US if Americans are willing to discuss lifting of the sanctions. And of course, US officials have repeatedly emphasized that Iran is holding up the progress. Even on another official from US said that it was very hard to do a deal with Iran, but the statement coming from Iran's minister gives some hope that this things could be on the move a little bit. There's also an official statement from the US saying that Trump has signaled that both Russia and Ukraine should reach rather a settlement with a June deadline for peace. So market is looking at these statements. So gold and even oil have been stable, not moving up further. That's what we have seen. On the overall markets, while yields have fallen to 4-month lows in the US, particularly the 10-year at 4.04%, market remains a bit skeptical still because the US has a lot of borrowings to do to meet their deficit and also the maturing bonds as well. So unlikely that will go down much. At the same time, dollar did not have much of a reaction to the fall in the yields as well. That could be the reason why because the yields will not go much further down. That could be the reason. All said and done, the dollar still looks a bit weak going by the momentum studies. Dollar index has not been able to break above 98 half, and it still trades below that. We have the dollar yen, which made a big move last week. In fact, there was a bearish engulfing pattern, which is which shows that the last week's prices fully overshadowed the previous week's prices, and it's a sign that we can expect more losses, particularly if it breaks 152. The 152 is a line in the sand for the dollar yen. If it breaks that, could go much lower and could also drag the dollar index lower with that. There is also some. I'm looking at the USD yuan, which actually broke 6.90 in Friday's trading. Since then, it has been trading slightly above that. Market looks a bit oversold, having fallen in the last 1 year, not 1 year, almost 10 months now. And that's a move of about 7% down. Considering the way Chinese yuan moves, I think it's a large move. So market is probably going to pause here, and maybe a bounce towards 6.95 is possible. However, if we do break 6.90 on a consistent basis, we could see 6.70 as well. And the recent policy approach of the Chinese central bank is supportive of more strength in the yuan as well. As far as the rupee is concerned, again, it was a very dull day. Moving between 90.60 and 90.75. Flows have been there on the both sides. Good point is that second week running, we had more than 1.7 billion of inflows for the market. So we are now actually for the year, that is January and February combined, the flows are near zero. Outflows of January have been fully erased with good inflow for the month of February. What we need to look at is how the trend comes going forward, whether the FIs continue to buy more of Indian stocks. At the same time, there is also a concern that the AI-led disruption on tech stocks of India as well as globally is weighing on the local index as well. So that is something that the market will be looking at as well. For the rupee as well as for the stocks, it is slightly of a concern that, despite the USD, about which we have been talking as a major factor holding the rupee down, has not really helped the currency to move much on the higher side, nor has it invited too much of flows. Although, yes, compared to January, we are still okay. So I think still watching dollar rupee well supported at 90.40 and 90 range, and any break of either side give some directional move. Yes, to finally end, I think at least we had one solid global positive news for India. India beating Pakistan handsomely in yesterday's group match, and hopefully we have more victories ahead. Thank you.
Thank you, Jake. And yes, that was quite the win for us in a very significant manner. And when it comes to and another win, I would say in terms of domestic markets and rupees, that our YTD flows are near zero now, with outflows in Jan being matched by inflows in Feb. So that's also a victory in some sense, and that's been keeping rupee in a range between 90.40 and 90.80, of course. Globally, we saw US yields fall to 4-month lows. There's a bit of skepticism, though, because even though the yields have fallen, US will have more issuances as the debt burden goes up. Dollar also didn't have much of a reaction to this part of the update. And the other hand was the inflation from the US on Friday, which surprised on the downside. Both are the core and the super core are at March 2021 lows. So quite a significant update over there. Otherwise, it's going to be a dull day today. Korea, Indonesia, China all are closed, while US is also closed for the evening session. That's it. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.